Hello, this is Avro from OTET Markets. We'll be with you with a short review on global economic outlook for the week ahead, which is going to be the 32nd week of the year. Let's first of all see what we had last week. As always, if you're checking the previous week, and then we can see what we can expect from the week ahead. Oh, sorry, let me here is my calendar. I'm looking after my calendar. Hello, where are you? Okay. Okay. So, last week was the central bank week. Bank of Japan was surprised us with the 15 basis point rate hike, increased the rates by 15 basis point to 25%, which is mostly because that they scare about the increasing the inflation as wages increased and the people started to get more worried about the inflation. So they thought maybe it's the time to end the ultra dovish policies. Bank of England also had a meeting. In central bank in United Kingdom, they cut the interest rates by 25 basis point as it was expected, widely expected, mostly because that inflation is already under control, and the 2% inflation for the second month in a row, BOE had more rooms even to cut the rates as the economic growth also is fine. Now the economic growth is going better, much better, but still there are some worries. And don't forget that the inflation in United Kingdom among the G10, they had a worse economic growth and they had a worse inflation, more than 11 point some percent. But now they have the lowest inflation among G10. And with the 2% among the advanced economies. With 2% inflation for the second month in a row. It's not just 1 month for as a chance, and we are expecting to see the inflation in the United Kingdom something around 2.25 basis point to 2.25% by the year end. That means that the central bank in the United Kingdom will have more rooms to cut the rates. Probably the next meeting also we can see the another rates cut. Also, we had a central bank meeting in Brazil. They hold the rates at 10.75%. If I don't mistake, yeah, they hold the rates. Yeah, they hold the rates at the same level because the inflation, as you can see, inflation in Brazil started to raise again. But at the same time, they had industrial production increasing by 3.2%. So they didn't have too much problem in the economic growth. But central bank in Brazil, they hold the rates at 10.75 basis point, which is expected to cut again. They probably will cut the rates. Yes, here 10.50%. Sorry, at 10.50%, which is expected again. They cut probably rates in the next meeting. This week we will have a meeting in Mexico. In the week ahead we will talk about that. But last week the main focus of the market was in the central bank meeting in United Kingdom on Wednesday, and then FOMC numbers on Friday. We had a video about both of them. I explained them in more detail. You can go back to our video YouTube channel or social medias and watch this video in more detail. I explained, but generally the central bank in the United States, they told that right now our focus should be more about labor market, because the labor market is more worried about the economic growth and labor market as the longer for higher rates for longer time. They already cut. Now with the delay, they are affecting the economy, and they worry right now about the economic growth. And also, in press conference, the interesting point was that in the press conference, central bank Fetcher Powell mentioned that in the central bank policymakers, they were part of the policymakers that they were seeking after the rate cut in this meeting. So I think they he told that just like to explain more that the central bank have more tendency to cut the rates in the next meeting. That just somehow they can just like support the idea of rate cut because for most probably they were not a less number of the FOMC members that they were seeking after the rate cut. So we can have the FOMC meeting minutes next week, then we can understand much more in detail what was going on there. But generally, this is our expectation, that to see the more dovish members in central bank right now, as especially as after the Friday's NFP numbers. We saw that on last month in July, United States employers, they hired just 114,000 new employees. That means that the labor market is even much worse than pre-pandemic, with 4.3% unemployment rate, which was 2.7, 2.5% before pandemic. And also, average earnings increased only 2% in the monthly base, which means here is good in the monthly base, which means only 2.6% in annual scale. That's very lower in our past 11 months. That means that labor market already have a signal that the inflation, while the inflation increased, the labor market also getting worse, getting weaker, and they need more support. That was what we had last week. We had earnings reports also last week. The earnings, somehow they were better than expected, but it doesn't mean that they were better than the previous quarter. Now, the inflation, their earnings reports, they were the companies, they had a better than expected. They had a positive surprise. Their number already is also down compared to the previous quarter. At the same time, the outlook of the companies for the upcoming months, for the rest of the year, for the second quarter, for the third quarter, and for the fourth quarter, their outlook was not. They were not such a good idea. They didn't have such a good outlooks for the next quarters. For the next week, on Monday, we will have monetary policy meeting minutes from the Bank of Japan. We can understand what exactly happened there, that why they decided to increase the rates not by 10% and by 15%. At the same time, we will have service PMIs from the most developed and developing economies, including Japan, including Russia, including China, and European countries, and United States. Mostly, we will have since it's a summertime, and most probably we will have a better than expected service PMIs from most of these economies, especially from the European countries. We're a little bit more positive about the service PMI in Eurozone economy, European economies. And Tuesday, the focus of the market will be in Asian season, will be an Australian central bank, where RBA will have interest rate meeting, and we're expecting to hold the interest rate at 4.35%. But at the same time, there is a possibility of the rate cut, as we know that Australia's biggest and most important business partner is China. Economic partner is China. So if the economy is getting weaker in China, it means that it will have the negative impact on Australian economy as well. So there is a possibility that Australian economy, to Australian central bank, to support the economy, they cut the rates by 25 basis points this meeting as well. So while there is a more probability for holding the rate at 4.35%, but at the same time, there is also option of rate cut by 25 basis points to support the economy, which is getting a little bit more under pressure because of China. At the same time, household spending in Japan, it's a very important number in Japanese economy. One of the biggest challenges that the Japanese economy had seen, they had the same challenge the government has in China. The people, the consumers, they are not encouraged to spend their money. They don't want to spend the money, as they're scared about the future of the economy. They cannot trust them on the economic growth, and they have to have a more income. So they're holding back from the spending of money. So this household spending, retail sales numbers, they are a little bit lower. They have a little bit lower numbers in both countries, in both China and Japan. That helped, that even increase the more GDP growth concerns and inflation concerns in China especially. In Japan, we are expecting to see a little bit better than previous month and household spending to increase by 0.2% on a monthly base. So for the second the previous months also the household spending was at minus 1.8%, which is in annual case, and in a monthly base it fell by 0.3%. So the negative territory for the several months in a row, that's again a big concern for the Japanese economy. On Wednesday, the focus will be on house price inflation in United Kingdom. We're expecting to see house price to fall a little bit again in this month. The last month, the house price fell by 0.2%. This month also we're expecting to see that house price to fall by 0.2, 0.3%, but in a month, which is in the annual scale, probably will raise by 1.5%. In Germany, industrial production can increase by 1% after 2.5% falling the last month. Still, the German economy is a concern about the German economy, and economic growth in Germany is still high. We have more concern about the economic growth in Germany. We can see what will happen there, but still there is a Spain and France that you're getting the performance is a little bit better than Germany in previous months. The Germans, they should be more careful about their economy, probably, if they don't want to lose their position as the biggest and the best economy of the Eurozone. China will have the import and export data. Last month, the Chinese export increased for the second month in a row, more than 8%. They have export because of the trade, that the trade war started between China and European countries. Before this new tariffs, the European import more electronic cars and more electronic cars accessories from China. That helped the Chinese export to increase more than 8%. That since that tariffs already started, we are not expecting to see the same positive export number from the China. And probably export numbers will be a little bit less than previous month, about 4 or 5% increase. Then again later in next days and Thursday, focus will be mostly on Japanese trade balance in Asian season, but in US season, in which we will have the economic data from the North and South America, the Mexican inflation and the Mexican central bank meeting will be in focus. So we are expecting to see that the central bank in Mexico to hold their rates at 11%, but that will be the second month in a row that they're going to hold the inflation at this level. And on finally on Friday, this week for United States it will be a little bit light week. But on Friday we will have the inflation day. In China, inflation is expected to increase by 0.4% after increasing 0.2% previous month to get back to positive area to increase to positive area from the negative area to increase inflation. We are expecting to see 0.4% inflation go on Friday, which means the annual inflation can finally get out of the negative territory and increase by probably 0.1%. In Europe, also, we are expecting to see the German inflation to increase by 0.3%, repeat the same number that we had the previous month, and see the annual inflation also around 2.2 or 2.3%. In Brazil, we are expecting to see the inflation not changing around 4.2, 4.3% around these numbers. Now we are not thinking about the big changes in Brazil. In Russia, inflation increased by the last month increased to 8.6%. We are expecting to see the higher inflation around 8.5 and 9%. That was the reason that the previous 2 weeks ago, the central bank in Russia, they increased their rates also. They hiked the rates by 2% from 16 to 18%. That's the most important data that we will have the next week. Let's see the charts and what we're going to have in the charts. Where is my chart? Let me share the chart I have. If we see the chart, then we can maybe understand what's exactly going on, what's more. Okay, here's the chart. This is US dollar chart. We're expecting to see the week ending between 103.60 and 104. This area I was expecting, but since there is something, what happened here that the unemployment, that the labor market data was very weaker than expected, and that increased the expectation in the market that probably there is also the possibility of 50 basis point rate cut in the September meeting, not 25 basis point, and that a little bit helped just like this more dovish tendency, more dovish sentiment in the market, and push the US dollar lower. But it's not possible to see the 50 basis point rate cut just like directly in one meeting in September. So most probably we will have a 25 basis point rate cut, and we can see the US dollar index next week around 103.60 and 104 again. And also, that we have too many risks in the market, and this the geopolitical risk in the safe haven demand of the US dollar also can help its demand, can help the US dollar to increase a little bit. On the other hand, on the stock market, while this negative data that we had in the labor market, while in one hand, that means that the central bank can go after more dovish policies, and it can help the stock market to increase because the lower rates, because of the lower rates. But at the same time, the problem is that these lower rates, this weaker data from the labor market means that economy, since that they were so weak, it means that economy is getting weaker and weaker, and this weaker economy means more pressure on the stock market. At the same time, the earnings, as I told, they were not such brilliant, and the numbers that we had, the results that we had on the earnings, they were like kind of more. We couldn't expect these data. We couldn't expect to see with these numbers, we can say that, we cannot expect to see the higher numbers in the stock market with such these data. This data says that, okay, there is not bad results, especially they are weaker than previous quarter. The usual in the first quarter, we don't have such a brilliant number, but in the second quarter, the data going to be a little bit better. But this time, in the first quarter, we had a nice data, and the second quarter, we had a weaker data. So that helped the negative sentiment in the market to grow, and that also increased the pressure on the stock markets. And finally on the oil market, let me talk about the oil market. The oil market, which was increasing because of risk that we had at the middle of the week, especially in the Middle East, and after on Thursday and Friday, oil price fell as the tension a little bit the markets felt that is controlled, but still we have a high tension around the Middle East, and it can help again. That can push again the prices higher for the next week, and probably we can see the inflation again. We can see the tensions again increasing in the Middle East, and which can be supportive, negative idea for supportive for the oil, and most probably we can see the oil price again raising around $78 and $80 for the next week. That will be the same almost for the gold market. The gold also can take advantage of this condition and increase higher. Gold is on an uptrend, and it can go further. We're still positive about the gold price, and it can go further and can increase much higher numbers. For now, there is no reason to see the gold falling right now, for now at least. So this overall what's going on and what's happening in the markets. Hope it was helpful for you. If you had any question, don't forget to don't hesitate to write down in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye.